Welcome to Boardroom Media. We're joined again by Pete McGuire, CEO of XM, for the XM.com weekly market update. Pete, welcome back.
Oh, good. Well, good afternoon, Andrew. It's nice to see you again.
Yeah, great. Now we'll kick off things once again domestically. We saw the RBA last week raise interest rates again, 50 basis points, which was pretty much expected.
Yes.
But yeah, it looks as though there's going to be clearly more interest rates in the coming months.
Yes, exactly right. Yeah, another one probably in September, early September, possibly even October. I'm not sure whether they go November and December for Santa Claus, but let's just see how the US plays. We've got no rate rise this month because of Jackson Hole, and they've got their big one in September. So yes, we'll be building off those as well, and we've got a few others jacking the rates up in the next week or two.
Yeah, and I think with the RBA, some commentary has come out, some minutes as well about their expectation of where the CPI will get to. So they're sort of saying around that 7.75% mark at the moment, which is not that far off. So it'll be interesting if it hits that, or are we looking at something above 8?
Yes, exactly. Well, we've got a big week for inflation. I was noticing that we've got China on Wednesday along with the US. We're waiting for that US number to drop. And then we've got Singapore on the same day, GDP Q2. And then we've got only a small little nation with 1.3 or 1.4 billion people, India. And we've got the inflation data for June on Friday. So yeah, it's certainly a global phenomenon. This week will be, I think it'll be full of surprises, and strap yourself in.
Certainly is. And I know on the domestic front as well, the Westpac consumer confidence numbers came out, the 8th month in a row, a negative. So It's clear that the high inflation and those higher interest rates are starting to weigh on consumer confidence a bit. And that's probably the lowest, I think that's the lowest number they've had since about April 2020, which was pretty much the start of the pandemic.
That's right. Yes. Who can believe it? Here we are, August 2022. Boy, life goes quick, Andrew.
Certainly does. Yet they've got a very buoyant employment market. So it's some mixed signals out there. So moving up to Asia, the next slide we can address the Bank of Japan cash rate, which is an unusual looking slide, but it just goes to show the state of the economy there at the moment.
Yes, exactly right. And it's been the trade-off has been just, dump the yen. You've got low interest rates. So in turn, the yen has been just smashed. And we've got around about that 136 handle at the moment. We've been as high, in that 140s. Everyone said the line on the sand might be 145. So who knows, we might get there, and that US dollar is edging up. So I'm just going to sit here and say volatility remains the trader's best friend, and there's no surprises coming out of Japan. They're in a different situation with inflation. They lose, Andrew, 600,000 Japanese died last year, not from COVID, just from old age, we know, and just from life itself. But they've got a very low population growth, and their main issue was a falling population, as demonstrated. So yes, you need consumers, and when you take 600,000 out of the basket each year, it really you need that strong growth to get inflation up.
Very much so. And the next slide is probably a good indication of that. We're looking at the Japanese GDP rate, which is probably very different to a lot of other countries where there's ups and there's downs. So obviously they're down again at the moment, but even there, when they have an up quarter, it's not a huge number. No,
it's not. I mean, considering, what you'd see out of, somewhere like Germany or maybe even, the US, Japan just splutters along, and I'm just looking at, there's no surprises there, or nothing there to hold onto your hat and go, wow. It's pretty flatlined.
Certainly is, and once again, because of their interest rate policy, we look at the US yen chart. It's been pretty much one-way traffic for a long time now. There's been a slight change in the last few weeks, but if you look at that over the last 12 months, pretty much one direction.
Yeah, hasn't it been dynamic? It's been just the trader's delight. That Mrs. Watanabe, we talk about her favorably, that's what they call the Japanese housewife that trades FX.
Yes.
And Mrs. Watanabe has just boomed on that yen trade. So that's another side of it. The retail land is just enjoying that depreciation as far as yen. If you haven't made a dollar out of currency trading, if you've been trading currencies in the last 6 to 9 months, Andrew, I think you better hang your hat up. and try another profession.
So too volatile for me, Pete. But let's move to the US now. Once again, we had some big numbers last week.
Yes.
We can see the US unemployment rate 3.5%. So they're saying it's a technical recession, yet they're pretty much got full employment. So
exactly, 528,000. I mean, we spoke last week, and I don't like even giving a suggestion because you can be out by hundreds of thousands. But they were more or less saying 250 was going to be where we are. If you get 250, it's knocked the ball out of the park. Well, even 200, and many people were thinking maybe it's a 125, 150. 528 is just mind-blowing. And where we go from here, as you said, how do what's interesting, Andrew? I've been looking at the Dow and the S&P and the NASDAQ over the last 2 months. They're nearly in bull market territory from that retracement.
Yes.
The NASDAQ's nearly up 20%. So it's just had an explosive move to the upside over that last 7 to 8 weeks. And is that a recession?
Well, I don't think so. Once again, the US economy and the US consumer is very resilient, and they're probably the most rampant consumers in the world, arguably. So, and if we look at those, as you say, those non-farm payroll numbers, even like we got 528K last month, but just right throughout the year, they've just been really solid numbers, which is reflected in their unemployment rate. But even their wage growth is actually not too bad as well. So that's why it's interesting. You're getting all these contradictory numbers from a recession perspective, but the economy and the consumers, they look as though they're at this point anyway. I know some of this data is looking back, not looking forward, but at the moment, the consumers seem to be fairly resilient.
Well, exactly, and that non-farm payroll only is the middle of July, so it's not too far away considering now the 8th of August. So we got another week and a bit, and we'll have another month, and then we're only 3 weeks out from the next read. And what's interesting, that 528, what's happening as far as 10-year, we spoke on that, and we'll talk about that, I'm sure, next week. But I think that this week, the preliminary GDP data for the second quarter out of UK, that's interesting to see. They'll be released Friday. I'm keeping an eye. The real storyline, and no one's really bringing it to many people's attention, is the drop in crude from that 110 handle that we just more or less went to sleep. It's 110, it's 115. Yeah, okay, all of a sudden 120. We've got Brent now at 95. You've got WTI under 90. That's a good sign for you're on the road, and what are you paying for fuel? Have you noticed it down a little bit?
Well, certainly, yeah, it's definitely down. There's no doubt about that. So, and I think that's the interesting thing. And we might touch on this in the coming weeks. A lot of those commodity prices are coming down, and they're probably yet to filter through to a lot of these economic statistics. But obviously, you look at the equity markets, and they're always looking 6 to 9 months ahead. So it's like the feeling there is, okay, is the worst of it behind us? Where are the opportunities to get back into some quality stocks?
Exactly. And I saw those good numbers come out yesterday out of China. They were better than expected. So that was a good sign. We might get a little bit of a rally to the upside off that feel-good moment. As everyone knows, we export a hell of a lot of our commodities to China. So we only want those guys to be booming. And if they're booming, then, well, at least, turning over well, it's a good sign for the Aussies.
Yeah, and the Aussie export market has held up really well over the last 6 months or so. When there was all that doom and gloom around about tariffs and sanctions and all that sort of thing, and I know some industries have been hurt harder than others, but in the whole scheme of things, it's held up pretty well. So for sure. But it'll be interesting. Yeah, as like we've spoken about the last few weeks, as we move into this back half of the year, I think from an equity perspective, traders are definitely looking at opportunities to get back into quality stocks that have got like genuine earnings and make a lot of money. And I think those tech stocks that were the flavour of the month, say 12, 18 months ago, that just don't have, they've got revenues, but they don't have the earnings. They may, I think they'll sort of stay where they are, I guess, to a certain extent. The bigger ones, the Apples, the Microsofts, etc. They'll see plenty of money coming, I think, in the coming months.
Yeah, I think you're probably right. I think you're right. Well, it's an interesting week ahead, and let's just see where we are this time next week, because nothing surprises me anymore.
No, well, there's plenty of stats coming out, so we'll keep an eye on that. But thanks for joining us again, Pete. And this has been Boardroom Media, and we'll chat again next week.
Take care, Andrew. Thank you.
Thanks, Peter.